So, hello guys and welcome to my channel where I translate technical accounting topics to a storytelling version, sort of. And today we're going to answer this comprehensive problem where you will assume the footsteps of an auditor of BBG. And you found the following transactions related to BBG's notes receivable. Okay? So, to summarize, BBG actually has a lot of promissory notes from different companies like Papa G, Daddy G, Professor G, Sir G, and others. Now, you can pause this video to fully read the comprehensive problem. And if you want to do that, pause it now and read the problem. Okay? Pause it now. Now, if you have finished reading already, again, you will realize that Baby G has a lot of debtors who issued promissory notes. And some of those notes were discounted or sold, and one of it is dishonored, while the others are still outstanding as of the year end of BBG. Okay? Now, since you have already read the problem, let's try to solve it. Okay? So, if I were you, the very first step is, of course, I will focus on the requirements or the questions. So, we have here number one, on December 31, 20X3, what is the notes receivable trade balance? So, I'm going to highlight the word trade because it means this question is asking for the notes receivable related to the normal course of business of Baby G. Like, for example, it should be a receivable from customer, something like that. Okay? Now, aside from being trade related, the note receivable asked here should be current receivables, which normally means it should be paid within 1 year or less in the statement of financial position of Baby G. And again, that is at December 31, 20X3, which means that the financial reporting date of Baby G is every December 31. So Baby G is following the calendar year. Okay? So again, the question number one is it should be a current notes receivable and is related to trade. Okay? Now, question number two is all about the loss on notes receivable discounting or selling of the notes. And the last one or the third question is all about accrued interest income. And let me be very clear. This is not interest income. It's not requiring the interest income. This is actually interest receivable. And that is because of this word accrued, which means interest which were not collected yet. So accrued interest. So again, accrued interest can be equated to interest receivable. Okay? Now, after focusing the requirements or the questions, we can now try to solve it because we already have the direction for our solving. Okay? So, now, we have here some promissory notes. And if I am to be asked, I will consider the promissory notes one by one. Like, I am going to start with Papa G's note. Because for me, it is much better to choose those who are mentioned first in the other information of long problems. Like this section here. This is the other information section for me. So, again, let's have Papa G's note. So, on September 1, its balance is 80,000. So, let's plot it here. And then, as you can see here, on October 1, Papa G's note was discounted, meaning we have to do this entry. Okay? So let's put amounts. Let's start with the credit notes receivable. So you cannot put here 80,000 only because you are entitled to receive 1 month interest from this September 1 to October 1. So we need to get that interest. Okay? So 80,000 times 0.20 or 20% because according to here, the note is bearing interest of 20%. Okay? Now, if you solve that, that's 16,000. However, this 20% is considered an annual rate. So the answer should still be multiplied by 1 month over 12 months. And if you do that, you will get 1,333. Now, when Baby G sold this note of Papa G, not only the note receivable was given up to the buyer, but also BBG's interest receivable for 1 month. Okay? So that's 80,000 plus 1,333 equals 81,333. Okay? And if you wanted to be strict in recording, you can credit notes receivable at 80,000 and then credit interest receivable at 1,333. It's up to you. But I'm gonna use here notes receivable plus interest receivable already of 81,333. Okay? That's the credit notes receivable. Now, for the debit cash, again, we have maturity value minus the discount. And if we start with maturity value, we have principal, which is 80,000, plus interest, in which the interest is principal, which is 80,000, times the interest rate of 20%, based on this again, times the maturity period, which is according to here, that's 3 months, over 12 months. Okay? So if you simplify the interest, you will get 4,000. If you simplify this, you will get 4,000. Okay? So the maturity value is 80,000 plus 4,000. That's 84,000. Okay? Now, how about the discount? That's maturity value of 84,000 times the discount rate of 25% based on this times the unexpired time, which is 2 months over 12 months. Because, again, there are only 2 months left from the date of sale or discounting to maturity date because 1 month has already passed from September 1 to October 1. Okay, so the unexpired time is only 2 months. Okay, so if we simplify, we're going to get 3,500 as the discount. So the proceeds is 84,000 minus 3,500 equals 80,500. So again, that's the proceeds. So we should debit 80,500 in this entry. Okay? And since it's not balanced, we have to debit loss on discounting worth 833. Okay? Now, there is an additional information here, which is Papa G's note was paid on December 1 as per notification received from the bank. Okay? And actually, guys, you don't care already about that. Because again, BBG already sold the promissory note last October 1, which means all the responsibilities and the powers and the control for the notes receivable has already been passed to the buyer. So again, you don't need to make an entry on December 1 because the notes receivable is not already Baby G's from October 1. Okay? So this is the full analysis of Papa G's note. So let's put a smiley on this and this and this one. And next is let's plot already the analysis to the required questions. Like these are the questions, right? And if we talk about Papa G, the current note receivable trade at December 31, 2023 is already zero. Because again, such receivable has already been sold last October 1. And the loss on discounting is 833 based on this entry. And the interest receivable is already also zero. Because again, on October 1, not only the notes receivable was transferred, but also the interest receivable of Baby G for 1 month. So now, let's go to Daddy G's note. So it is said here that Daddy G's note at October 1 is 300,000. So let's plot that here. And also, it grows by 24% interest. And also, it will mature in 2 months, which is, I guess, it's on November 30 or December 1. But according to here, the note was dishonored, meaning Daddy G did not pay on December 1 or November 30. So what will happen? First, we need to get the maturity value first by getting the interest for 2 months. Okay? Because on October 1 to November 30, that's 2 months or December 1. So 300,000 times 0.24 or 24%. And again, that's based on this here times 2 months over 12 months equals 12,000. So supposedly, Baby G should have received on December 1 a total of 312,000. So this 300,000 plus this 12,000. But then again, Daddy G dishonored such promise. So because of that, one of the effects is that there will be an additional interest for 1 month, which is 6,000. That's 300,000 times 0.24 times 1 month over 12 months. And that's the interest from here to here. Because we're going to assume that Daddy J did not pay even until December 31, 20x3. Because if he has paid or the Daddy J has paid, then it should have been mentioned here in this problem. Right? So again, let's add 1 month interest, which is 6,000. So all in all, Baby G has an interest receivable from Daddy G of 18,000 instead of 12,000. And of course, since the note was dishonored, then the notes receivable of 300,000 will now be erased. So that normally happens if ever the promissory note is dishonored. So the notes receivable will be erased or credited and accounts receivable account will be debited. So that's it for Daddy G's notes receivable. Now, let's put a smiley here and here. Okay? And then let's plot. For Daddy G, again, there will be no notes receivable. Because again, such notes receivable has been converted to accounts receivable from the time it was dishonored. And then, there is no loss on discounting also because Daddy G's note was not sold. But here, in the interest receivable, let's put here 18,000, which is this 12,000 up to the maturity date. And since it was not paid until December 31, there is an added interest of 6,000. Okay? Now, let's end this lecture for now to keep this video short. So let's continue answering this comprehensive problem in the next episode. And if you have learned, please click like, subscribe, and hit the notification bell to be updated on my next videos. Again, thank you for watching and see you on the next one.